What do you think the future of Bitcoin holds? That's a question on the minds of many, especially those invested in the cryptocurrency space. In the world of cryptocurrency, predictions are a dime a dozen. But when they come from someone like Jeff Kendrick, head of FX research at Standard Chartered, they tend to carry a bit more weight. According to Kendrick, there's a significant surge on the horizon for Bitcoin, and it all hinges on the approval of Bitcoin spot ETFs. But what exactly are spot ETFs? In simple terms, they are exchange-traded products that track the price of an asset, in this case, Bitcoin, and can be bought or sold just like stocks. It's a way of investing in Bitcoin without actually owning any of the cryptocurrency yourself. Now, Kendrick has made some intriguing predictions about the potential impact of these spot ETFs. He estimates that we could see between 437,000 and 1.32 million new Bitcoins held in spot US ETFs by the end of 2024. This could lead to inflows that reach anywhere from $50 billion to $100 billion. What's more, Kendrick anticipates a decrease in supply and an increase in demand. This combination could potentially drive the price of Bitcoin up to an impressive $100,000 by the end of 2024. And if we take it a step further, Kendrick suggests that Bitcoin could reach a staggering $200,000. If these predictions hold true, we could see Bitcoin reaching a staggering $200,000. But what drives these predictions? So why such bullish predictions for Bitcoin? The answer lies in a combination of factors. Let's delve into the key aspects influencing these forecasts. First off, there's an anticipated increase in demand, coupled with a decrease in supply for Bitcoin. This is a basic principle of economics. As demand increases and supply decreases, prices tend to rise. Drawing parallels with historical events can also help us understand the potential trajectory. Jeff Kendrick, the head of FX research at Standard Chartered, brings our attention to the impact of the first gold spot exchange-traded product on the price of gold. Over a span of 7 years, gold's price skyrocketed more than fourfold. Now you might be thinking, 7 years is quite a long time. But here's where things get interesting. Kendrick suggests that the Bitcoin exchange-traded fund market, or ETF for short, is maturing at a much faster pace. This rapid development could mean that we might see significant price increases for Bitcoin in a shorter time frame compared to gold. So, with the Bitcoin ETF market evolving swiftly and demand for Bitcoin expected to surge, it's no wonder that Kendrick predicts a potential price of $100,000 for Bitcoin by the end of 2024. But there's another crucial element to consider. The amount of immediately available supply of Bitcoin is at an all-time low. This makes Bitcoin more price inelastic than ever before, meaning its price is less likely to be affected by changes in demand. With Bitcoin's available supply at an all-time low, the cryptocurrency is more price inelastic than ever before. But what does this mean for you? You might be wondering, what does all this mean for me? Well, if you've been keeping an eye on Bitcoin or are already invested in it, these predictions could signal some exciting times ahead. A surge in Bitcoin's price, as forecasted by Standard Chartered's head of FX research, Jeff Kendrick, could mean significant returns for existing investors. Imagine the potential gains if Bitcoin truly soars over 300% by the end of next year. However, it's also important to keep in mind the potential risks. The cryptocurrency market is known for its volatility, and while the projections are optimistic, they are just that, projections. Prices could just as easily swing in the opposite direction, and those investing heavily should be prepared for this reality. For enthusiasts in the cryptocurrency space, these predictions could mean a more mainstream acceptance and adoption of Bitcoin, especially with the approval of Bitcoin spot ETFs. However, this could also lead to increased regulation and scrutiny, which may alter the decentralized nature of the cryptocurrency that many find appealing. As with all investments, it's essential to do your research and understand the market dynamics before making a decision. After all, the future of Bitcoin may be bright, but it's always wise to tread with caution.